If this is true, this is even more incredible. Um, this is from Jim Willie. You know him as the Golden Jackass from thegoldenjackass.com. The guy's been all over financial stuff, silver especially, gold, precious metals for years. He knows all about the manipulation. He has a great mind, great opinion on things. And he always talks about, like his source in China. And he's got something new that's just crazy if this is true. And this is posted from Silver Doctors, but by his own website, Golden Jackass. China and Bank for International Settlements, BIS, negotiating deal to settle global contracts in gold at $5,000 an ounce, says Jim Willie. I saw that title, said, what? I got to get on this a little later. I read a little bit of this and then forwarded it to myself to do this video. So I'm going to read most of this, which I haven't even read yet. And to be honest with you, that's usually what I do. I find something good, read a paragraph or two. This is fantastic. Send it to myself. I want to read it later. So he says the big U.S. banks are dead, as in giant hollow reeds. Such has been the jackass refrain for 8 years straight. They are insolvent monsters and destroyers of wealth and capital. They are massive criminal enterprises. Events prove the case well. The too big to fail policy has instead assured the wreckage and destruction of the U.S. economy, saved the banks, but ruined the capital base. The U.S. government, under the management of the banker cartel since the 9/11 event, which they orchestrated in a bold move, has systematically brought down the macro business sector, permitted the U.S. dollar platforms to decay completely, and rigged the financial markets in every conceivable arena. The central bankers are running scared. The jackass wishes they would all depart in exile, located on a lovely Polynesian island, and eat each other, with the winners wearing their bones and teeth. The growing fear about the global banking system has driven the 10-year Treasury bond, U.S. Treasury bond, yields to all-time record lows as a safe haven. Investors might perceive the powerful Western U.S. economic recession, provided they are not low of intellect. The U.S. T-bond black hole is drawing capital from the U.S. landmass and the global centers, just in time for the new currency launch with devaluation. The wealth loss will be magnificent for all the dopey, clumsy, mindless investors who believed the bond market offered a safe haven. No security can be offered by a bond market with almost no legitimate buyers. An annual $1 trillion deficit, huge supply, and deep dependence upon the interest rate swap derivative contract, which produces artificial bond demand at zero cost. The free ride comes as a result of the zero interest rate policy, which will change. The entire bond market depends upon it. The truly remarkable fact is that millions of investors believe the U.S. Treasury bond market is a safe haven. Let Darwin do his work and remove them from the scene, along with their wealth, which is mostly phony anyways. Meanwhile, they might enjoy a little more gains as the TNX sets sights on 1%. Flat on the yield. The risk is acute from a list of dangers. A, the derivative machinery might break down. B, the actual price inflation might be published as well over 6 or 7%. And C, the pension funds, God, have I done some pension fund videos. The pension funds across the United States might be forced into new special treasury bonds and thus tarnish the pristine U.S. T-bill or T-bonds. D, the new Sheis dollar, as he's calling it, the Sheis dollar, might be launched with a devaluation, casting a bad light on the protected U.S. Treasury bond toilet paper. E, narcotics might be revealed as holding up the entire U.S. banking system nucleus, namely Wall Street banks. You know, the funneling of the money, the laundering, they keep getting nailed for over and over and over and again. Just pay a fine. Don't do it again. Pay a fine. Don't do it again. Pay another fine. Don't do it again. I guess they got to make money somehow. Or F, as new gold-backed currencies arrive on the financial tables, the U.S. dollar might be recognized as a third world currency with nearly $20 trillion in debt to default. The TNX reached lows of 1.35% in recent bond trading. The rebound will face resistance with the pair of declining moving averages. The captive range for around a full year was 1.75% to 2.45%, showing a 7.0% range. Subtract the potential to arrive at the intermediary target of 1.05%, which, due to the psychological factor, can be called a 1% target. Loud gongs and alarms will go off when the target is reached. Not if, but when. To claim an economic expansion is in place is one of the greatest economic lies ever told. The nation is gripped in its 8th consecutive year of recession. Every time I hear about something like that, I just think of Obama earlier this year. Anybody that says the United States economy is not growing and is not doing well is peddling fiction. And I said it recently. That's funny. The last 10 years of GDP was a lie. We had to revise GDP. Oh, what, like last year's GDP? No. The last 2 years GDP? No. 3 years? No. 5 years? No. Jesus Christ, how could it be so far off, and for how long? About 10 years. We revised all 10 years, last 10 years, and we revised it down. Not up, down. It's worse than you've been told. Peddling fiction. Speaking of peddling fiction, Jesus. Here is the significant factoid drawn from historical records. New history is being made. U.S. Treasury yields during the Great Depression were notably higher than today, which should warrant a serious dialogue on the reckless monetary policy stuck in place by the Federal Reserve. They are conducting ruinous experiments with quantitative easing, i.e. money printing, which have driven out legitimate bond buyers. They claim reinvestment of principal gains on a $4.5 trillion Federal Reserve balance sheet, which in theory should be zero. It should have no real balance sheet, honestly. $4.5 trillion. If truth be known, the U.S. Fed is sitting on the largest toxic waste paper basket in history. Its only close rival is the Euro Central Bank, which has over $3 trillion in its toxic paper vat. They each act as buyer of last resort of garbage. They will each be declared bankrupt entities, a process well along in stages. Next section he calls big U.S. banks on the brink. The Wall Street bank stock sell-off was powerful from July 2015 to February 2016. The rebound has been pushed surely by the U.S. Fed easy money channels. The central bank has no authority to buy stocks, but it does so via its bank cohort accomplices. The declines have put the big U.S. banks in the danger zone. Their sell-off will resume soon, as the moving averages for the bank stock index BKX are in a downward slide, and the downtrend line is strong in resistance. I'm going to close my email. I don't want you to hear my little ding-dong-dongs and whatnot. The sell-off will resume soon as the moving averages of the bank stock index BKX are in the downward slide, and the downtrend line is strong in resistance. Their monetary policy has undermined the safety and soundness of behemoth banks that constitute the core of the U.S. financial system. Attention could be given to the broken banks and the decidedly errant heretical policy. A risk stands for the big U.S. banks to be suddenly booted from the revered Dow Jones Industrial Index, the marquee stock index. They are insolvent hollow reeds steeped in criminal activity. Their profit is from bond carry trade and accounting gimmickry. In other words, as I always talk to you about, cooking the books. The chart shows an important turning point in the making. Do I have, nope, up. Economist 2016 cover. Let's get rid of that. And let's instead add, not that. Give me 1 second. There we go. There's our bank stock index. Definitely a downtrend. There's no denying what you're seeing here. The chart shows an important turning point in the making. The intermediate downtrend provides some strong resistance. The moving averages were penetrated quickly, probably with enormous easy money from the U.S. Fed pushed into bank stocks. The move up in the last week for the BKX index went against the jackass forecast in that July hat trick letter report. The banks are their boys, a protected lot. The 20-week and 50-week MAs might still serve as some resistance to be seen immediately. The inescapable truth is that the big U.S. banks are deeply insolvent and depend upon casino activity and narcotics money. They have been perverted beyond all recognition in the last 2 decades. The jackass maintains that a major systemic Lehman event, as in Lehman Brothers, is in progress with the collapse of several national banking systems. The risk is ripe for bank failure in contagion. Italy and Germany are in the focus. The on-again, off-again U.S. Fed rate hike talk in 2013, 2014, and 2015 has worked against the big U.S. banks. The hint or threat of a rate hike sends the stock values down. The bank stocks values down. At the same time, the next in the endless series of fraud investigations, never criminal for the exceptional players, also works to send their stock values down. They had to absorb $280 billion in just fines and penalties from bond fraud in the last few years. That's combined banks all over. Still an incredible amount of money, $280 billion. And that's them again. Oh, you rigged the markets, you made $6 billion in profit, pay a $500 million fine, get lost. That includes all of those. Imagine if they had to pay a real fine. Oh, you fraudulently got $6 billion in profit from that illegal activity? You're going to pay that $6 billion back in fines plus some additional fines. Imagine if that was the case. This number would be over $1 trillion. Easily. So they had to absorb $280 billion in just fines and penalties from the bond fraud in the last few years. Then tack on the credit portfolio losses, most recently suffered in the energy sector, with quantitative easing to infinity stuck in place and lending to business put on hold due to endless chronic economic recession. The big U.S. banks look vulnerable to a systemic breakdown. Nothing describes better the systemic Lehman event heralded by the jackass than the BKX Bank Index and the $750 trillion in derivatives across the world on the verge of blowing up. Money velocity continues down. Nothing displays the failure of modern central bank monetary policy better than the falling money velocity chart. They speak of stimulus when the only benefit is to big banks in redeeming worthless bonds. They puff up the bond market, even the stock market. They neglect the municipal bond market. They send wrecking balls into the pension fund system and the insurance company sector, which cannot possibly cope with the nil or near zero interest rate yield. No stimulus is given to the U.S. economy by sustaining dead insolvent criminal enterprises called the U.S. banks, the big U.S. banks. The quantitative easing monetary policy is destroying capital, seen in the mass of corporate job cuts. The U.S. economic recession rivals the Great Depression in all but recognition. And I want to show you this chart he's looking at now. Money velocity, 2006, really 7, starts off on 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Every single year. Powerful decline every single year. Look at this. Look where we are in 2016. For God's sakes, by 2017, this will already be a ground, literally like ground zero, so to speak. This is incredible. The proof is in the pudding. The money velocity defined as the number of annual round trips for existing money within the system. If truth be told, and it never is by the big banks or their agents running the U.S. government, the U.S. economy has been mired in recession since 2007. The gray shaded area should be extended all through 2007 and in every year since. However, the fascist business model rules dictate that any description of economic performance must place an adjective before the word recovery. The favorite is the sluggish recovery. Mine is the fierce economic recession that qualifies easily as a depression. So he says the big new development on the global front, and that's how he ends this article. The Chinese financial officials and the Basel-based Bank for International Settlements, BIS, are negotiating a global reform of all bilateral contracts. They strive to alter U.S. dollar-based contracts and change the contract terms to gold settlement. They are working on a global contract at the $5,000 per ounce gold price in contract conversion. China represents Eastern interests, while Basel represents Western interests. It is not yet clear what will happen to commodity price mechanisms. If and when the global contract reform is completed, all bilateral contracts will be shifted into gold settlement, no longer USD settlement. The result will be the U.S. government is then made free to launch a domestic-only new U.S. dollar, called disrespectfully the new Scheisse dollar, by the jackass for the last 2 years. It will resemble a third world currency and be subjected to a sequence of devaluations. A $500 billion trade deficit will require several years to overcome. If reduced by 50% in 5 or 6 years, it will be a miracle. The $1 trillion federal deficit has a different solution in mind. The U.S. government plans to commandeer pension funds, forcing investments in the special U.S. Treasury bond. It will not be a confiscation, but rather forced conversion with all the disadvantages of currency devaluation that come. So we're going to take your money out of this investment, force it into these treasuries, these new ones, and then we're going to devalue the dollar at the same time, which then devalues your crap over here, sitting here. See, if you took that and said, well, I'd rather put it in precious metals, get my money out of that damn system completely and buy myself precious metals, physical, not paper, I'm going to call a broker. No. Physical precious metals. I have these here for this reason. Silver coins. You want gold? Get gold. You'll be real happy with what it does. Silver, you'll be very happy as well. I believe silver will actually outperform gold, which I've discussed numerous times in videos. It doesn't matter. Gold, silver, precious metals, period. And there's only two that are precious. That's gold and silver. What about palladium and platinum? Yeah, they go up along with them too. But they're not really considered precious metals, and especially have a 5,000 year history. Palladium and platinum do not have a 5,000 year history plus of being used as a settlement for trade and whatnot, as i.e. money. Gold and silver have. So now you'll notice he did start that last paragraph with if and when the global contract reform is completed. So he's saying if it's even completed. So again, Jim Willie, he's on top of stuff, and he always talks about sources from China and this and that. I've never really heard any kind of nonsensical stuff from Jim Willie for the most part. So it was a very interesting read when I started and said, man, this will make a good video, because I think that could he laid it out. That could very well play out. And here's the good news. If what he says doesn't happen, there's no agreement, there's no agreement. Did I mention gold and silver have a 5,000 year history? Do yourself a favor and watch a documentary called The Secret of Oz. Bill Still did that one, and he also did the Money Masters documentary. And he explains this is just a cycle. And he says, by the way, gold and silver aren't the end-all be-all fix either. The fix is actually allowing a government to print money without borrowing it into existence. Because then you don't owe anybody money, bonds, I'm investing in bonds. There's none of that. There's no treasury bonds. You didn't borrow it. There's no national deficit. There's no debt ceiling. None of that exists. You just print the money you need to pay all government services, period. I've explained this before. If they did that, and by the way, President Abraham Lincoln did do that with the greenback. He won the war because of it, and then realized, wow, I'm going to implement this into the country. This works fantastic. We don't borrow it into existence. We print it. We pay all of our bills, which would also mean what? Property tax? Not needed. Driver's license fee? Not needed. Any fee? Not needed. Fishing license? Not needed. Maybe you need a license. I don't know why you'd need the license, but all you're essentially doing is paying a fee to get the license anyways. But maybe just to carry your card around, I'll get a fishing license, hunting license, just to put it in my back pocket. It costs me nothing. Why? Because the government pays for all this. They don't borrow it into existence. That's the key. And lo and behold, President Abraham Lincoln got his head blown off. John Wilkes Booth. Every time we have a good president, they seem to die. Isn't that amazing? Anyways, we can only sit back and wait and see what happens. Whether this does or not, it doesn't matter. Precious metals, as in that documentary we'll show you, at the end of the paper money fiat currency cycle, when everything blows up financially, the next thing is backed by gold. That's what his documentary shows as well. So it may not play out exactly how Jim Willie said, but gold will absolutely, precious metals will have a role in the next financial system after this one implodes here in the near future. You want to make sure you have yours now, not then, because the prices for them then will not be pretty. As far as they'll be very expensive and hard to obtain. Take care.